Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of Asahi Songwon Colors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Mehra. Thank you, and over to you, sir.
Thank you, Rutuja. Good afternoon and welcome everyone. Thank you for joining this Q2 FY23 earnings conference call of Asahi Songwon Colors Limited. The results and investor updates have been emailed to you and are also available on the stock exchanges. In case anyone does not have a copy of the same, please do write to us and we'll be happy to send it over to you. To take us through the results of this quarter and answer your questions, we have today with us Mr. Gokul Jayakrishna, Joint Managing Director and Chief Executive Officer, Mr. Prateek Shah, Chief Financial Officer, Mr. Mitesh Patel, Vice President Strategy and Growth, and Mr. Saji Joseph, Company Secretary and Compliance Officer. We'll be starting the call with a brief overview of the financial performance, and it will be followed by the Q&A session. I want to remind you all that everything said in this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the uncertainties and risks that the company faces. These uncertainties and risks are included but not limited to what we've mentioned in our annual reports, which you'll find on our company website. With that said, I'll now hand over the call to Mr. Gokul Jayakrishna. Over to you, sir.
Good afternoon, ladies and gentlemen. Welcome you. I'm happy to welcome you to our Concall and thanking you all for attending the Q2 FY23 call. This also happens to be the H1 FY23 call as well. So we will briefly look at the quarter results, but also the half-yearly performance as well. And once I give you a little brief, you all have already looked at the results, so you know the basics. But I'll just run the group through the results in very brief on the consolidated basis, and then I'll open the floor for questions and I'll take all your questions. So as you can see, we have had a very difficult quarter, one of the most difficult and challenging quarters in almost a decade, if not a little more than that. The general environment for pigments, dyes, colorants, and chemicals seems to be extremely challenging. And from various points of view, demand has been subdued over the last 3 months and continues to remain so currently. Raw material prices, which had risen from last year by about 25 to 40%, they are starting to come off. But there's inventory losses that all companies who are holding raw material as well as finished goods tend to see. So that takes its own time to funnel through the system. And at the same time, the situation in Europe, all of you are very well aware of, is extremely tricky and unpredictable due to the Ukraine impact and the energy costs over there. Just to give you a little idea of what's going on in Europe, the largest chemical company in the world, BASF, which is located out of Europe, is shut down. So this is you don't hear this in a long time that BASF has to shut down its main Ludwigshafen plant. But that is the kind of situation Europe is going through. In relation to that, we are very, very fortunate here in India, thanks to the dynamic handling of the situation by the Narendra Modi government, and also decently strong general economic conditions prevailing in India relative to the rest of the world. Things are not as bad as they are in Europe. Now coming to the financial performance, our quarter we reported a turnover of 127 crores on a consolidated basis. This compares to a 94 crore turnover in the corresponding 3 months. And if you look at the performance on a half-yearly basis, we reported a revenue of 291 crores. So this compares to 192 crores in the corresponding 6 months of the previous financial year. This obviously course,
I'm sorry to interrupt you, sir. Mr. Gokul Jai Krishna, your voice is breaking.
audible.
No, your voice is still breaking, sir.
Uh,
Uh,
let me. This is working. Yeah. Can you hear me any better?
yes, this is much better. Please go ahead, sir.
Okay, I've changed the internet connection. What I've said so far was it reasonably audible, or should I repeat some of it?
Like few seconds only.
Okay. All right. So coming to the financial performance, I will start again that the quarter we reported a turnover top line of 127 crores. This compares to a top line of 95 crores for the corresponding 3 months on a consolidated basis. The half yearly performance stands at 291 crores as compared to 192 crores in the previous 6 months comparable basis. So you can see that there has been a significant increase in the turnover. This, of course, is coming on back of the acquisition of the pharmaceutical business of Atlas that Asahi has acquired. And that is working out reasonably well, even in this very challenging times. On the profit before tax basis, we reported a very dismal performance of only 29 lakhs as compared to 6.35 crores in the corresponding quarter. And on a 6 monthly basis, we made 5.82 crores on PBT basis as compared to 12.82 crores in the previous corresponding quarter. And then coming to the EBITDA performance on the consolidated basis, we made a EBITDA of 7.5 crores. And on a 6 monthly basis, the EBITDA came to 19.26 crores as compared to 20.64 crores in the previous 6 months. So these are the basic numbers. With this, I mean, I've already given you a brief of the headwinds that currently are faced by the pigment industry in general. It is not for Asahi, definitely. It is one of the weakest set of numbers we have presented in a decade or more even. And but however, if one looks at it in relative terms to the performance of other pigment businesses or dyes companies in the space, you will see that it's quite reasonable. We are reasonably strong on EBITDA, and on top line also we have done quite well. Our finance costs have certainly gone up, and this is due to the leverage buyout of the pharmaceutical business. The pharmaceutical business has been bought over by Asahi with a stake of 78%, and we have paid a 48 crores amount upfront for this, which has been partially leveraged. And then, of course, we acquired a 20 crore debt with the company when we bought it as well. So this is the reason why our leverage has gone up. And the reason for some of the numbers showing little negatively is also because of the rise in the finance cost. This, of course, is temporary, and we will go back to our longer term goals in terms of our numbers in borrowings. With that, I'd like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Chaudhary from Samarthya Capital. Please go ahead.
Good afternoon, sir.
Good afternoon, Pratik.
Hi. So we have, I think, quarter on quarter, there was a significant decline in our revenues in our standalone Glow business. Could you bifurcate that into volume decline versus realization decline? Because the crude basket had fallen materially.
Yes. So, Pratik, you are right. There has been a significant decline in our Q on Q in our standalone blue business. So our total production is down by 22% if you compare it to the previous comparable quarter. And in terms of value, in terms of sales value, it is down by 32%. So the basic, both the reasons you mentioned are prevalent. I mean, the number one reason is decline in volume because we have lost significant volume due to the poor demand conditions. The demand conditions remain quite sluggish and weak, and most of our customers have been caught on the same foot in terms of inventory. They have a lot of inventory, and everybody in the world is seeming like they want to destock. We want to destock too. So all our customers and us and our competitors, everybody is in a destocking mode. And thus, when you club this with a weak demand, you can imagine that there is going to be a huge pressure on how much you can actually produce without significant increase in inventories. So our productivity was down by 22% in terms of volume, and in terms of sales, it was down by about 32%. And so this was a combination of poor demand, so drop in productivity, and also prices coming off. So it's a combination of the two. I would say about 70% due to the drop in volumes and 30% due to the prices coming off. And also add to this the factor that the inventory that we carry, whether it's finished goods or raw materials, is now being used, and this inventory is obviously cost the company more because the prices have come off now, while the finished good prices are coming off further. So the inventory that we are caught with is also resulted in making the profit before tax and the profit numbers seem bad.
All right. And what would your view be on change in market share, if any, amongst your share of business with your customers?
So I think our share of business in percentage terms has actually improved because we are maintaining a productivity of about 75%. We normally, in the blue business, we are talking standalone right now. So the standalone, we normally we close to 100%, and we strive to do 100% all the time. And we have managed this over a number of quarters. I mean, I don't remember in the last 8 quarters when we have missed the target in the blue crude business of making 100% productivity. Now we are at 75%. Now, if you compare it to others and generally the market, the demand is significantly lower than a drop of 25%. So a lot of our competitors are either closed or running below 50%. And hence, if you look at it simply in percentage terms, our market share in the blue business has gone up. And it is difficult to give you an exact number, but it would be a decent increase in market share in terms of percentage terms. But that is not very relevant because that doesn't help us right now. See, in a market which is growing and demand is strong, any improvement in market share is going to add to your bottom line. Now, it protects bottom line, yes, but still, I mean, it doesn't save us from, the vagaries of the market right now.
Mm-hmm. And you also happen to mention about inventory losses. So given that we are still sitting on a very high inventory, would we still expect inventory losses to hit us in the next one or 2 quarters?
Not 1 or 2 quarters, but probably for a quarter. Yes. However, having said that, I think that, we have already brought the inventory down by about 20%, and we will strive to bring it down by another 20% to get it back to where we are comfortable and normally sticking at. So we are obviously off the peak of inventory levels now. So the worst of that inventory level is over, and I see it declining further from where we are now, going towards our desired levels of inventory. And this should take no more than a quarter, I think.
And when do you see your spreads normalizing, spreads between your raw material basket and your finished good prices?
Again, it should, bottom out in this December end quarter.
Okay.
And then start normalizing in the first quarter of the calendar year, the last quarter of the financial year.
Okay. Thanks a lot. Thank you, sir.
Thank you, Pratik.
Thank you. The next question is from the line of Krishna Kansara from Molecule Ventures PMS. Please go ahead.
Hi, sir. Sir, my first question is regarding the environment of the industry. So I understand that the operating environment in the pigment industry and chemical industry in general also is not very conducive. But by when do you expect to ramp up the Azo plant to, let's say, optimum capacity utilization?
Sorry, I didn't get your name. Can you just give your name again?
Usha Kansara.
Usha Kansara.
Trisha.
Yeah, Usha, so Trisha. Yeah. So thank you for your question. Yes, the general environment in the chemical industry, the dyes and pigment industry, the colorants industry is very, very sluggish. And it's very difficult to pinpoint as to how long this will last. I'll give you my take on it. I think we are already seeing a bottoming out. So I don't see it getting worse. We have already reached that point where we are at the worst point. And from here, I do expect the improvement. When this improvement will come through or how long this, the bottom phase will last without going any further down is difficult to guess. My best guess, 3 months. So we should be bottoming out by end of December, and then the first quarter from January onwards, January 23 onwards, we should see green shoots in demand coming back, because by that time I do expect that most global companies, and even for that matter large Indian companies who are consumers of these products, would have seen a bottoming out post Christmas in their inventory levels. See, you also club this with Christmas coming in, and things will probably be slow for another month. Then come January, people will see that they are already destocked a lot. And if then you see any green shoots in demand, then we could see a reasonably quick upturn in the demand scenario compared to where we are now. And that's why I say that we are already at the bottom and not going to get worse.
Okay, correct, sir.
And then to answer your question about the Azo business. So in the Azo business, we were very fortunate in the COVID period. Our team did an exceedingly wonderful job in putting up the plant just under the budget that we had set out to do. And that has really stood us in good stead. If we were to put up the plant today, it would have probably cost us 25 to 30% more. The cost of land, the cost of steel, cement, construction, labor, everything has shot up since then. So we were very fortunate in terms of capex to have completed the budget in good time and within under the budget that we were set out to do. And that was completely financed through equity by us and our JV partners. So there was no debt at that time on the balance sheet. Now, similarly, when we started the plant, and now we are into the first year of operations in that sense, we have seen that the market conditions have been very, very bad. The worst I've seen in over a decade. So that has put a lot of pressure, and we have not been able to get utilization levels because of the poor demand as we would like. So we continue to do utilization of about 35%. This is, of course, not what we expect because the demand scenario is weak. However, the good thing is the team at our Dahej facility is now reasonably well set, and products also one after the other are getting set. We are getting good breakthroughs. Sales-wise, our team is doing a good job in this poor market conditions, and our business is a new startup business in the Azo side of the pigments, and we are now steadily doing about 60 to 70 tons of production and sales on a monthly basis. We should look to ramp up this immediately as the demand goes up. So very difficult to predict, but it's coming January, February, March quarter, we should see a reasonable uptake and go definitely beyond the 110, 120 tons per month scenario, whereby we'll be at about 55% utilization.
Okay. Okay. And sir, one question related to the Azure cases only. So can you give us a rough idea on the timeline by when we'll start the second phase of this particular cases?
So we would have liked to start the second phase in the first half of the next calendar year. However, this is going to be pushed back given the current demand scenario, and we've almost lost 6 months in that sense. So I would say that towards the second half of the calendar year 23 is when we will probably get into that phase of switching on the project for doubling the capacity.
H2 of calendar year 23, correct?
Or financial year, yeah, somewhere in that area, H2 of the next financial year.
Okay, okay. And so my second question is on debt. So for the first time, we are seeing this kind of debt on our balance sheet. So is this something that you're comfortable with, and especially in such challenging times?
So certainly we are comfortable with the debt. So that answer I'll give you straight away. I mean, yes, the debt has gone up. This is a conscious decision in terms of growth, and we wouldn't have done it if we were not comfortable. If you look at so on the comfort level first, very quickly, if you look at our debt to equity ratio, it is at 0.45 times equity. Debt is 0.45 times equity on a standalone basis, and 0.65 on a consolidated basis. So by any financial parameter, if you look, 0.65 times equity is still remaining very conservative. So in that sense, we are comfortable. We have leveraged consciously in adding the Dahej plant to our portfolio and spreading our wings across the spectrum of pigments, looking to 10 years future. Also, we have acquired the API business in the pharmaceutical space of Atlas Life Sciences, and this is also now owned by Asahi. So there is leverage coming in from both of these places. For a number of years, Asahi was known as too conservative, too slow, debt-free company, and well run, but not growing at all. Now we have responded, and we have completed that strong phase of 5 years of consolidation in 2020, and now we are entering 5 years of growth phase. So between now we are already in 2022 and going into 23. So by 25, you will see that the company in terms of growth levels is at another level. You can already see the basic green shoots of this coming through. If you look at the top line for the 6 months, it is at 291 crores. So this is more than what we do on an annual basis for the past 5 years generally. We have done in 6 months. So our top line, if you compare to the last 4 to 5 years, when it was stagnant in the 280 crores region, has almost doubled out. And this is just the beginning, because the pharmaceutical business that we have acquired comes with a parcel of land in Chitral, which we are leveraging and putting up an expansion project with backward integration, which is going to result in EBITDA expansions in the API business, which currently are low in the plant that we have acquired.
Okay. So you mentioned about the API business. So I have one question related to that also. So are we seeing any challenges in our API business? Because since the time we have acquired, the margins have declined severely. So what is your outlook of the API business as of now?
Yeah, thank you for this question. This was something on my mind. I wanted to anyway brief the group about this because it's a new business that we've acquired. So it's been about 6 months since we acquired it. The market conditions in the API business generally, not only ours, but generally the market leader in the space is Divi's and Laurus Labs and all. You can see that all of these API companies have been struggling to maintain margins because the pricing pressure is there. So we are no exception. It is similar to the rest of the API industries. Our product prices have also come off a bit, and the market environment is challenging. Having said that, if you look at if I just looked in detail at the 6 months gone by since we procured the business, and I get great comfort because we have been able to increase top line in these extremely challenging times. This augurs very well as we go into expansion into the Chatral business, which is going also ahead of schedule. It was scheduled to start in Diwali, so October, November of 23, and now we are ahead of schedule, and we should be probably starting in September or even aiming to start in August of 23. So it augurs very well as we go into the expansion phase that our top line is doing quite well. As for the margins, yes, prices have come off and so have the margins. Our EBITDA margins, which were at about 7% in the API business, have come off to 3.5%. So they've halved in terms of EBITDA margins. However, cash flow has been the saving grace. Cash flow has improved, and our borrowings in the API business has reduced significantly by about 4 crores. This, given the current market situation, augurs very well. Our cash flow is good, as well as the creditor periods are also working out pretty good. So the general business is running smoothly.
Okay. Okay, sir. Sir, I have one last question regarding debt only. So, what is the repayment plan currently, given that we still have the ongoing capex and we also have agro expansion plan on the card? So, what does the repayment schedule look like?
So, on a consolidated basis, the debt is at 175 to 180 crores. Currently, as we speak, it's at about closer to 170, and we see it peaking out at about 210 crores. This is taking into consideration the capex that we are doing in Chatral. The capex is 60 crores, so roughly 60 crores, give or take 5. So, given that, we see debt peaking out at about 210 crores. And if you look at our ratios at 210 crores in terms of debt equity, it will comfortably remain at about 0.75. So in that sense, we are comfortable. In terms of repayment of debt, of course, it has a 5-year repayment schedule for the new loans, and the current loans that we have only 60 crores of long-term debt. So in that sense, those 60 crores of debt will come for repayment on a regular schedule. We will add about 30 to 40 crores of long-term debt given the Chatral project. So total long-term debt should not exceed 100 odd crores. And this will have a regular, repayment schedule and payment, and we should be deleveraging again from that peak.
Okay. Okay, sir. Thank you, sir.
Thank you.
For answering my question. Thank you.
Thank you. The next question is from the line of Nagesh Jain from NJ Investments. Please go ahead.
Thanks for the opportunity. Sir, my first question is regarding the drop in the demand in China due to COVID lockdowns. Recently, the Chinese government has imposed anti-dumping duty on phthalocyanine grades from India. So, just wanted to know, would that affect Asahi?
Thank you, Nagesh. So, yeah, the Chinese lockdown, it is difficult to decode the impact of that, but the anti-dumping duty is an easier one to answer. Generally, we don't, in any way, both China-related questions, we don't have any direct exports to China. So we have no direct impact of the Chinese business in terms of our market share per se or our business. And also with the duty, the pigment manufacturers of India have gotten together. I am a part of that group and a member, and we are fighting the Chinese against the anti-dumping duty. However, having said that, the impact of that on Asahi in terms of the duties directly is nothing because we don't export anything to China. So we don't have to grapple with the problems that some other customers who are exporting directly to China are grappling right now with containers on board or, orders yet to be shipped and all of that stuff. The impact is kind of indirect because with this duty of 17.5%, which looks like the current thing, there would be a dent in the cellos being exported from India to China, and that competition could come into other areas of the global market. So that is an indirect impact that will be making the market a little subdued, but no direct impact on Asahi per se. And also the Chinese business right now, as you said, because of the COVID thing, is slow anyways. So I don't see a major impact of this coming out of it.
Okay. So my next question is, you had mentioned the capacity utilization of CPC Blue, that is around 75%. So I just wanted to know about the alpha and beta. So one is first the alpha blue. See, we had some issues earlier regarding supply of this grade to Clariant because that portion of the business was taken over by Huback. So just wanted to know, has that been sorted out and supplies have become normal?
Yeah, so thank you for this question. There is something good that I can report on the alpha. Yes, the problems that we did have problems with the product when we started with Clariant, and these have been sorted out. And after Huback having taken over Clariant, the alpha business is going on with Huback Clariant right now, and that's been sorted out. And on the utilization, we are at CPC about 70%. We will probably continue to remain in the area of about 60, 65% for a while. And then, as I said, January, February, March, we should see much better numbers.
Sir, what is the utilization for alpha and beta blue, sir?
So beta blue utilization has been quite good. I think it is about 80%, which is normally what we do in the beta business. However, sales have been slow. So there has been some built up in inventory, but otherwise beta utilization has not dropped. Alpha utilization had dropped to, for the last 2 months to 0. However, we've just restarted and alpha should be coming to 70% in probably in January, February, March, we should see 75% utilization in the alpha business.
Okay. So my next question is on the beta. We had a tie-up with the DIC for supplying this grade. And DAC were selling their inks business to concentrate more on the pigments business of theirs. So does that will affect our beta blue sales to them?
I did not understand the question. We do have a ongoing relationship with DIC, and we are lead supplier to them. But I didn't understand the question. If you could repeat.
Yeah, we supply beta blue to DAC for their inks business.
Correct.
I believe they have selling of that inks business to concentrate more on pigments. So I just want to know, first of all, whether this information is correct, and if it is correct, will that affect our beta blue sales?
No, so I don't think, I'm not privy to this information. DIC is a ink company who has acquired Clariant and gotten into the pigment business in that sense, but they do remain an ink company with 35% of the world's market share, and I don't think they have plans to sell the ink business.
Okay, so because we are one of the major, our major customer in beta blue is DIC, if I have understood correctly.
Yes, that is correct. That is correct.
Okay, so sir, my next question is, sir, 45 crore is the sales from the subsidiary as well as the joint venture. If you take out the difference between the standalone and the consolidated, just wanted to know how much it is from the subsidiary. If you could give us the breakup there.
Pratik bhai, can you give the breakups of the three?
Yeah, sure. I'll just give the breakup.
Okay, sir. In the meantime, I have one more question. Like Azodyes, you had mentioned the utilization is still at around 35% and expected to reach around 55% by January, February. Just wanted to know whatever the samples we had sent to different customers for the approval and all. Have we received any approvals during the last quarter?
Yes, we have. See, we have sent number of samples, and we have also received a decent approvals and also orders. So we are doing 60 tons of pigment, about 60 to 70 tons of sales, of which about 45 odd tons is locally. So we have got internationally as well as locally good, decent approvals in actually 5 of our products.
So these approvals, can you name any of these companies? Sorry, sir, someone was talking.
Yeah, sorry, carry on.
Okay. Now, this whatever these approvals we have received, can you name the companies? Is it like Sun Chemical or Sigwork or like where you are approaching them?
I would not like to go into the names right now because it is a little sensitive in this market conditions. Given the poor market conditions, we don't want to disclose the breakup of customer names, but the big accounts have not yet started.
Okay, that is fair enough.
So the names you mentioned are still under trials, and their demand in Europe is very slow. So, but yeah, they are under trial, and we have got some approval.
Okay, fair enough. Sir, any that data they could get it, subsidiary and JV?
Yeah,
yes.
Sir, breakup is from API subsidiary it is 34 crores, and from Azure subsidiary it is 11 crores.
Okay, so that means the Azure business still we must be making loss, sir?
Yes, absolutely.
Thank you very much, sir, and wish you all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So my first question is, sir, what is the value addition we get when we convert CPC into alpha and beta in percentage terms?
Pratik, can you take this question in terms of value addition?
Yeah, sure. Just a moment.
Yes, sir. And can you give the EBITDA of our Azure business subsidiary also? You said the revenue was 11 crores, right?
Yes, that's right, 11 crores. And EBITDA there is negative.
Yeah, but can you quantify it, sir?
Yeah. Pratik, we will do that also in numbers. Can you quantify the EBITDA for the Azure business?
Yeah, just a minute. It's negative 2 crores.
Minus 2 crores.
For the quarter ended September.
Okay. And what is the value addition we get for alpha and beta as compared to CPVC blue?
Sir, is it okay if we take this question offline one-on-one with you?
Yeah, whom should I contact, sir?
You can get in touch with our compliance officer, Mr. Saji Joseph.
Saji Joseph.
Sorry?
Mr. Saji Joseph, who is our company secretary and compliance officer, you can get in touch with him.
No problem, sir. And sir, you said you had sizable inventory losses in this quarter. So if it is possible, please quantify the inventory loss also, that if it is possible.
Pratik, can you
sir, it won't be possible right now, so we'll take this one-on-one with you, and we'll come back on this particular question as and when we are ready with the required information.
Oh, and sir, what is the EBITDA break-even level for our subsidiary for this Azure pigment business?
So generally, the EBITDA break-even level, I would say, would be in the area of about 55 to 60%.
So right now we are at around 30%, right?
35%.
Sorry? 40, 45?
No. 35%.
Oh, so we are long away from
because the demand is very low. We are at 35% right now, and it would normally take about 55-60% utilization for breakeven.
So considering the current demand, by which period you think we'll be able to reach 55% utilization in that business?
We would hope to do that in January, February, March.
No. Considering the demand situation, we will be able to do it in January.
We are hoping to do it. But then, as you rightly said, it's considering the demand. The demand could get stronger or weaker. One cannot predict right now how it will be in January, February, March. But I do think that it's going to be improving. And if it improves, definitely our plant is already geared to make 180 tons of pigment. So that should not be a problem once the market is better.
And sir, it's a little confusing. So what is the difference between this exopigment and alpha and beta blue? So both are same or they are totally different products?
No, they're completely different products. Alpha and beta blue are phthalocyanide pigments, and red yellows are azopigments. So they are completely different in terms of one is red and yellow, and the others are blue and green.
Okay.
But the end application is the same: inks, paints, plastics, rubber, textile dispersions.
And sir, since 50% of our revenue is coming from exports, and it must be dollars, so we must have got some tailwind of the currency in this quarter also, no? Because rupee has
Yeah.
Still, even after that tailwind, we have reported loss at that level.
Yeah.
And you said the inventory losses will continue in this quarter also, right?
Yes, it will take a couple of months or a month or so for it to, settle down.
And so lastly, regarding this Azo business, if I remember correctly, you have our JV partner is supposed to lift 20% of the production. So we are operating at 30%. So we are not able to sell any meaningful quantity outside of our JV partner. Is that understanding correct?
Yeah, that is to an extent correct. We are not able to export quantities much beyond the JV partner, but locally we have done very well. Locally we are doing about 45 tons. So the JV partner is contributing 15-20 tons.
Okay. Rest all is sold domestically, right?
Oh, yeah. The rest all we have a number of customers. So product approvals have come through to many customers already. And the problem is, whether it is my JV partner, whether it's Sun, Sigwork, name the company, whichever company you talk about, generally the demand is very slow.
Okay,
so
and lastly,
it's very difficult to push material to customers when you are a startup.
And sir, my last question regarding our API business, I think there we have taken expansion, which is roughly around 60 crores, right?
Correct.
So post-expansion, what type of EBITDA we can expect from that business?
Post-expansion, we could expect a EBITDA of about 15 odd crores from that business.
15 odd crores, okay. And
15,
in
20,
percentage terms?
Crores. Even 20 crores.
In percentage terms, it will be more than 5%?
Yeah. It will be more than 5%. So certainly more than 5%.
Okay, sir. Thank you and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Praveen Sharma, from an individual investor. Please go ahead.
Hello.
Yeah. Hello.
Yeah. Hi, Gokul. Hello, Gokul. Am I audible?
Yeah. I can hear you clearly. Thank you.
Yeah. Gokul, I have a question. And this destocking scenario which is playing out now. End consumer demand, the end product demand, which is paint, inks, plastics, that particular thing you are witnessing slow down, or it's the destocking thing? Because what I'm seeing all over is the paints demand, the automobile sales are roaring, the textile sales are good, and the ink, the world has opened, the ink demand has also gone up. So it's the end product demand, end consumer demand, which is facing the problem, or the intermediaries are actually destocking. What is the actual scenario?
I think there is a combination of the two, and because generally, let me put it this way, it is basically a major destocking that is taking place in the industry globally, in our industry. This is because we saw 2 years of increase in prices, whether it's raw material or our own prices, our top line, our EBITDA, our numbers, our profits, everything continued to increase for 2 years every quarter. And whether it is me or my competitor or my supplier or my customer, everybody was, buying material more than they needed. So when, for example, let us talk about Asahi. So at Asahi, we operate on the Japanese system of just in time. So we keep very minimal inventory levels of anywhere between 7 to 15 days. For 2 years, we changed that policy to maximum inventory that we can store. So we were doing 30 to 45 days of inventory stocking during 2 years period. This paid off very, very well. Continuously. It continued to pay off well every quarter because, every time we hoarded inventory, next quarter the prices would go up and we would think that, we are pretty good at it. Similarly, our customers did the same thing. So they ordered more than they needed from me or anyone else. And they stocked up too, because every time they stocked up, next quarter the prices would go up and they think that, okay, this is really good that we have stocked up, otherwise we would have paid much more. So everybody was in a cycle where they were stocking more than they needed and more than they consumed. Then about 3-4 months back, as you know very well, generally commodities and demand and prices all started to come off. As soon as people saw this happening for more than 2 months, 1 month was okay, 2 months was okay, but the third month, then they immediately decided that, okay, now, what if the prices are actually going to come down? And they immediately, urgently started, the policy that let us not hold any material. And because they don't want to hold any material and they are holding a lot, they had to destock. So the destocking effect was major. It wasn't normal. It was 2x what it should normally, or even in some cases 3x. Not for me, but generally for a lot of people. That made the whole demand environment extremely slow. Top it up with general global scenario where Europe is doing extremely badly right now because of the Ukraine crisis. And general inflationary conditions that are prevailing in the world, everybody is spending a little less. So yeah, I mean, what you said is right. In paint and some of these packaging industries, we have seen some revival of demand, but it has fallen sharply over the 6 months. Now we are seeing bottoming out or revival of it slowly. So it will take about 3-4 months for this revived demand to show up, after the destocking of inventory is over. So clubbed with destocking of inventory and high stock levels and a slow global scenario with inflationary pressures and lower spending across the globe. Yeah, people started spending on travel post-COVID and hotels and flights and restaurants and all. But generally, because of the energy problems, a lot of businesses in Europe are slow and consumption there is generally slow. People are afraid how they'll go through winter. So because of this scenario, general demand was very slow. So the two combined together made a very prolonged slowdown, which is now bottomed out.
Okay. And but as far as Azo is concerned, the major supplier was China. So there the supply choke is also there, correct? So do we see any supply choke of Azo production from China? And hence when this destocking will be over, we will immediately get an impetus in terms of higher production and higher demand for us.
So, on a macro level, what you are saying is something that we've always thought is possible to play out. Immediately, right now, the demand is so sluggish that the slight choking up from China, it's not completely dried up because production in China, like you said, China is dominant in azos, unlike hellos, where India dominates completely and China is afraid of India. In azos, China is 70% of the global market, but their supply is not completely dried up. Despite COVID being the supply being slow, the market is so much slow that it hasn't trickled down to India as much as one would have liked. But on a macro level, this thing is likely to happen sooner or later.
And these automotive paints and all those things which are sold domestically in India, because we are seeing roaring demands of automobile here in India, and other paints are of course a part of an automobile, integral part of the raw material for automobile industry. This demand, the buyers they buy globally. These, like Suzuki will buy you from Japan and then they supply here, or how does it happen? Means the paint, because we are only pigments. Ultimately, this will go. Our product is a part of a particular product, which is further a part of another product, which will go into the end consumers.
Right.
Product requirement. So it's a supply chain. So
Yeah.
the domestic buying by the large players, it happens through the global channels, or it domestically also they buy?
So normally this is happening through global channels because the top automakers have their channel of supply for that particular paint, and this is coming through global channels.
Okay.
And the volumes are not huge. The business is good, but the volumes are very small.
So same with ink, inks, printing inks and packaging ink. This all happens, like demand scenario in India is pretty good. I was wondering whether the buying happens through the global channels or it happens domestically.
So not in ink. Unlike paint, in ink, it doesn't happen through any global channels. It would probably come directly to us.
Okay. And as far as this API business is concerned, means once this expansion is over and we are backwardly integrated, do you see is there a scenario there also demand by the time we do expansion the demand will slow down or something, or this PG product which the API which we supply has a constant demand and it doesn't undergo a cyclical structure, because at the end of the day it's a pharmaceutical product?
This is a very good question. I'm glad you asked this. This is a very, very thoughtful and smart question. So I'll give you a very clear answer on this. So pregabalin is our main product. In the new plant also we are going to put up some capacity for pregabalin. Of course, we are going in with backward integration, so our EBITDA numbers and our reliance on suppliers is going to diminish substantially. We plan to make CMH, making us completely self-reliant. Not only that, we would start selling some of the CMH we make in the open market as well. So that will make us a very strong player in that sense in the pregabalin business. We also hope to go in for exports there in a major way. And now to talk about pregabalin, as you said, so unlike many of the other products in the API space, pregabalin is in its initial stage of growth. And it also is not looking like a product dependent on too much of obsolescence risk. So I think over the next 5 years or 7 years, we should see a very good time in terms of demand for the pregabalin business. And talking about the cyclicality of it, so we are already seeing cyclically a downturn in the pregabalin or even in the general API space. So I think hopefully by the time the plant starts, we should be able to catch the cycle on the upside. The cycle is already right now on the downside, and again, I would probably say that in January, February, March, we may see bottoming out of that cyclical trend that we normally see.
Okay. Yeah, pharmaceutical industry is also undergoing destocking. And there the end user product demand is not a concern because at the end of the day, pharmaceutical, it's an essential commodity. So I think things will, improve from there. Okay, thank you very much.
And we are actually, thank you for your questions. They were very, very well thought out. And we are very optimistic about this entry into the pharmaceutical API business because it gives us, a good diversification as well as it sets us up for 10 years. And you can see that we are nearing now, 250, 200 and 300 crores of turnover on a half yearly basis. So we should be at about 550 odd crores plus on a full year basis immediately.
Yeah. Okay, great. All the best.
Thank you very much.
Thank you. The next question is from the line of Prerit Chaudhary from Green Portfolio. Please go ahead.
So good afternoon. I have a couple of questions. So first one is related to the balance sheet, and so in H1 we added some new plant, property, and equipment. So if you can give breakup of same, what are the new assets for the company?
I could not hear you. Are you on speaker? Because there's an echo. I couldn't hear you.
Can you hear me now?
Not very well. There's a huge echo. Are you on speaker?
No.
Maybe Mr. Chaudhary, you can take the call on the handset mode. Hello?
Yeah.
Mr. Chaudhary, can you hear us?
Audible now? Yes, I can hear you.
Yeah, go ahead, please. Can you repeat?
So I just wanted the breakup of new plant, property, and equipment that we got in the H1.
The breakup of what?
The fixed assets that we added during the H1.
I cannot hear you at all.
Hello, am I audible now?
Yes, you're much better. Please go ahead.
A little bit, yeah.
So can you provide me the breakup of plant, property, and equipment that we added in the first half of this year?
Natik bhai, can you?
Yeah, basically, per se, there is no addition. The impact is only coming out of consolidation because of the API business getting consolidated for the first time.
No, but if we compare it to the FY22 numbers, the assets have actually grown.
So on a standalone basis, you mean for Asahi Songwon?
No, on the consolidated basis.
That is what I'm saying. See, on a consolidated basis, the only difference it is making is because of the business PP getting consolidated for the first time.
Okay. All right. Okay, my next question is, so in capital work in progress, so we have made significant addition during the H1. So what are the breakup for the same?
It is mainly pertaining to the API expansion project in Chhatran.
Okay. All right. Yes, okay, thank you. That's it.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Gokul Jaikrishna for closing comments.
So thank you, ladies and gentlemen, for attending the call. I really am happy with the interest that we are seeing from the group, and there were some very, very good questions, and I enjoyed interaction with the group. I would like to leave you all on a note of positivity. I think turnover-wise, Asahi has done quite well in this half year, reaching 290 crores. This was our aim, which we set out to have, that we should cross the 500 to 600 crores top line mark and set ourselves well with a little diversified business and outlook for the next 10 years. Last 1 year, we have been able to do that, do this pretty well. The top line is already starting to reflect that. We have a whole range of pigments where we earlier only had the full range of blues. and now we also have an entry in the API business through a well-run, profitable, ongoing company. So it gives me great pleasure in, trying to go forward over the next 3 years, consolidating this growth phase and taking the company to a new level. We hope for the caveats are that we hope for improvement in the market conditions, which are really very poor currently, one of the worst I have seen in over a decade. And as soon as this improves, I think we should be placed well to take advantage of the upswing. And I think when the upswing comes, this may take 3 months, this may take 6 months, but I think the upswing, the longer it takes, the stronger the upswing will be. Thank you for attending the conference.
Thank you. On behalf of Asahi Songwon Colors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.